Section 13 of Foreclosures. Bailiffs. Court bailiffs. A bailiff is an impartial person appointed by a court or by a corporation or other person for the protection or collection of property that is the subject of diverse claims. Court bailiffs generally deal with the eviction of tenants under a writ of possession or an order for vacant possession. They will physically go in and evict people if they will not move on their own. Bailiffs will often remove assets and commence a peaceful possession for the lender or new owner. They will seize and sell the debtor's property as instructed in the writ of possession. Generally, bailiffs require a security deposit of $1,000 to $2,000 before they will enter the property in order to get contractors to do the work. The goods will be sold by discretion of the bailiff. After holding them for a minimum of 30 days in storage, they will be sold by auction liquidators, tendered bids, or mail-in bids. Under an order for conduct of sale, the court bailiff will have guidelines to follow in regards to selling the goods. The goods must be advertised on 2 occasions, usually in the local area newspapers and the BC Gazette. The bailiff can take tendered bids, which will be mailed in. That's the end of Section 13. Section 14. Advertising the foreclosure. Embarrassing the seller. It is important to understand the impact of a foreclosure has on people's lives. If you can imagine what it is like to be in other people's shoes, it will be easier to see why it is often best to advertise with discretion. Reasons for default in mortgage payments. Illness. Some jobs, such as real estate sales, do not have disability coverage. Imagine yourself newly diagnosed with cancer. 6 weeks of post-operative care, 6 months of chemotherapy, and 4 weeks of radiation. You obviously will not be able to meet all of your financial obligations. Financially devastated, consider how you would feel if another realtor colleague drove up to your home and planted a sign in your front yard announcing to your neighbors, "Foreclosure." Would not an ordinary lawn sign seem more appropriate? Loss of job or layoff. Many people are stretching to make ends meet. In smaller communities dependent on lumber mills, for example, employees are constantly living under the threat of job loss. These hardworking people cannot help if market fluctuations and economic downturn force layoffs or shutdowns. People sometimes base a great deal of their self-esteem on their jobs and homes. How do you think you would feel if you were laid off from your job for 3 months, then the realtor put a sign in your yard that said "court sale"? What if you lived on a busy, high-traffic road and all of your friends and family drove by daily and read the signage? Losing jobs and homes have triggered many attempted suicides. Tax sales. Oftentimes, people who are diligent in making their monthly payments cannot save enough money to pay their city taxes. After a period of time, usually 3 years, this will trigger a foreclosure process, and the owner will be scrambling to find the money to save the house. Embarrassing the owner will not help the situation. Estate sales. What if a relative dies without life insurance and the family is unable to make the payments on the home? It would be devastating to watch the bank roll in and take over the sale if they could not sell the family home in time. Mismanagement of finances. It is easier to buy a house now with lower down payments. When money is so accessible, some people tend to maximize their payments and then find themselves in financial trouble. Divorce. Separation can be devastating on people. When people have to move into 2 different homes, household payments will automatically double. The order for child support and or maintenance can increase a person's monthly payments beyond what they are able to manage, which can then throw them into bankruptcy and foreclosure. Litigation. Someone gets injured. ICBC denies the claim, and the owner is now personally liable for $400,000 in damages, or the owner goes to jail. In either case, the payment-making ability is gone. These are just some of the ways that ordinary people get into trouble. Having compassion for them is imperative. If you put yourself in the place of the homeowner in foreclosure who does not want to move but is unable to make the monthly payments, you will be able to relate better to the way the owner feels. The owners may still continue to live in the home throughout the court process, and their relatives, friends, and neighbors will see the sign go up in the yard with the words court sale or foreclosure. As we covered in the last topic of discussion, this could trigger feelings of shame and send the owner spiraling into depression and anger. Even long after they vacate the home, they may pick up the newspaper and see their home advertised. They may feel that this is a personal advertisement announcing the fact that they cannot make the payments. They may take this personally, and you might just receive a nasty telephone call. Invitations for lower offers. Most often, when working for the bank, the realtor will have been instructed not to advertise the property as a foreclosure. Some banks will even include this on their listing contract. The bank discourages this practice as it only seems to attract buyers who intend to lowball, make a very low offer on the property. These low offers waste everybody's time. People generally think that the bank is suffering and will let it go for next to nothing. As a realtor, you will receive many calls inquiring, how much is the mortgage? And can we assume the existing mortgage? The dollar value of the mortgage has nothing to do with the carefully appraised value of the home. The bank's mortgage is generally insured by CMHC, Genworth Financial, or Canada Guarantee, and is guaranteed to be covered. So if they cannot recoup the dollar amount of the appraisal, they will not accept the offer. They will wait to transfer it into the insurer's name in order to claim their proceeds as promised. The only way that they can accept a lower offer than the appraised value is if they get special instructions from the lender's insurer. And that's the end of section 14. Section 15, municipal tax sales. Tax sale rules. Failure to pay municipal property taxes after 3 consecutive years results in the property being placed for tax sale. There are some differences among the various municipalities in British Columbia, but most have similar rules. Rural areas have different tax sale rules, as does the City of Vancouver, which has its own charter and rules. You must contact the Surveyor of Taxes for more information. General information. The Municipal Act has been replaced by the Local Government Act. For complete rules on tax sales, the Local Government Act should be consulted. This act gives the collector the authority to sell a property for the upset price, all in capital letters, which is the total of all outstanding taxes plus interest plus 5% tax sale costs plus land title office fees. Advertising. The Act requires municipalities to advertise in a local paper not less than 3 or more than 10 days prior to the tax sale. To avoid having your property being listed in the newspaper, your delinquent taxes must be paid approximately 2 weeks prior to the tax sale date. Tax sale. A public auction is held at City Hall. Bidding is accepted on all properties. The bidders are advised to search the title of the property in advance to determine if there are any charges registered against the property. The minimum bid is the amount of the upset price. If no bidding takes place within 3 calls by the collector. The city is declared the buyer at the upset price. Purchasing property. Full payments must be remitted immediately by the successful bidder. If the successful bidder leaves the premises without paying, the property might be lost. If the payment is not remitted, the collector again offers the property for sale. Notifying charge holders. The collector is required by law to search the titles of all properties involved in the sale and within 90 days after the tax sale, to notify all charge holders registered on each property. Redemption. The original owner has 1 year after the property is sold at the tax sale to pay the taxes and buy back the property. This is called redemption. All registered charge holders also have the right to redeem the property. To redeem the property, the charge holder must remit the full purchase price plus interest on the purchase price at a rate set by the province within 1 year of the tax sale. If the property has been sold at a tax sale and the city has been declared the buyer, 50% of the upset price plus interest may be paid as an installment, thus extending the redemption period by 11 months and 21 days. This applies only to property having improvements. As soon as the property is redeemed, the collector will refund to the tax sale buyer the purchase price plus interest to the date of redemption. Rights during redemption period. When real property is sold at a tax sale, all rights held by the person who was the owner at the time of the sale immediately cease to exist, except for the right of redemption, the right to bring an action to set aside the tax sale, and the right to possession. The registered owner's right of possession is subject to the buyer's right to bring action against the original property owner for waste, i.e., damage or destruction to the premises, and the right of the buyer to enter onto the property to maintain it in proper condition and to prevent waste. Damage, destruction, or loss of property during the redemption period are at the risk of the buyer. The buyer is advised to ensure his interest in the property. Property not redeemed. If the property is not redeemed during the 1 year period, the collector registers the new owner at the land title office. This cancels all previous registered charges, except for those matters set out in section 276.1C2G of the Land Title Act, and any lien of the Crown, an improvement district, or a local district. The new owners are required to pay the property transfer tax to the provincial sales tax administrator after application has been made to register in the land title office. All properties are sold as is without warranty or guarantee. And that's the end of section 15. Now we're on section 16, the role of insurers of mortgages, CMHC and GE Capital Mortgage. Who is CMHC? Canada Mortgage and Housing Corporation, CMHC, is the Government of Canada's housing agency. Its mandate is to help Canadians meet their housing needs. As Canada's authority on housing, we contribute to the stability of the housing market and financial system, provide support for Canadians in housing need, and offer objective housing research and advice to Canadian governments, consumers, and the housing industry. Prudent risk management, strong corporate governance, and transparency are cornerstones of our operations. Progress on these objectives is achieved through the activities conducted by its business areas in partnership with provincial governments, financial institutions, and the Canadian housing industry. CMHC's 4 key business pillars are housing finance, research and information transfer, assisted housing, and export promotion. They are involved in the default process because they are the insurers of the property under foreclosure. For more information on CMHC's business areas, products, and services, visit CMHC's website at www.cmhc-ca.ca. schl.gc.ca. Who is GE Capital Mortgage Insurance Company? GE Capital Mortgage Insurance Company of Canada, more commonly referred to as GEMI, G-E-M-I, is the largest private sector supplier of mortgage default insurance in Canada. They are a direct competitor to CMHC. GE works in partnership with lenders, mortgage brokers, real estate agents, and builders to make affordable housing available to all Canadians. They combine their experience in mortgage default insurance with their strength in technology and their extraordinary commitment to quality to provide their customers with the level of service they expect. GE offers a competitive choice of flexible mortgage default insurance products for the buyer, renovation or refinancing of homes across Canada. These include a portability feature introduced to Canadians by GE. They also work with lenders to provide home buyer seminars, and they offer a consultation service to lenders working with borrowers experiencing temporary difficulty in meeting their mortgage payment commitments. GE understands the importance of fast, reliable processing of mortgage insurance applications. GE Excel, our fully automated delivery and approval system, enables us to receive, process, and in many cases approve applications within minutes. For more information on GE Capital, please visit their website at http://www.allcanadianmortgage.com. Default management. The primary benefits of good default management practices are: A, the borrowers keep their home; B, the lender retains the investment; C, it enhances lender-client relationships; and D, it reduces the costs for everyone, the borrower, the lender, and the insurer. When a loan goes into default, the first objective of the lender is to determine if the loan can be saved from going into foreclosure. The lender has a number of remedies it can offer to assist borrowers in resolving their current default problems, such as A, special payment arrangements; B, re-amortization; and C, capitalization. Borrowers should be encouraged to meet with their lenders at the first sign of financial problems. The borrowers may wish to sell the property because they can no longer afford it. If there is a shortfall, while offers can still be entertained, they must contain a clause indicating that the offer is subject to approval of the mortgage holder. Legal action. If the borrower cannot or will not pay their mortgage obligations, the lender must commence a legal action. The insurer requires the lender to undertake an assessment of the borrower's financial situation to determine the most appropriate course of legal action. In all cases, the lender is required to provide the insurer with judgment for the shortfall, except where there is very little hope of recovery, or if the judgment amount is so small that the cost of pursuing it exceeds its worth. The following is a summary statement of the type of legal remedies available in BC. Order for conduct of sale. An order for conduct of sale provides the lender with the legal right to sell the property and preserve judgment against the borrower. If the property is not purchased by a third party during the listing period, an insurer will present an offer to purchase to the lender and buy the property through a court-ordered sale. The court may permit the borrower to reside in the property up until the sale or order made after application is granted. If the 90-day listing period expires without a sale, the lender files a claim to the insurer for the entire debt, and the lender will instruct its solicitor to transfer the title to the insurer. Order absolute. When applying to take an order absolute, the lender abandons the judgment, takes title to the property, and markets it. As the lender has acquired title under order absolute, there is no requirement for the courts to approve any subsequent sale. How long is the property usually listed? The insurer requires the lenders to market the property for an initial 90-day listing period. Lenders have full authority to sell units in foreclosure at market value without involvement of the insurer. Properties must be listed through the MLS, and the price must be supported with comparative market analysis (CMA) reports. Pricing is usually reviewed every 30 to 45 days based on a review of the market activity reports, and sales must be at arm's length. Lenders have the option of reviewing the listing of the property for another listing period. However, prior to listing for this second listing period, the lender is required to undertake a full review of the property and complete repairs to resolve any issues that are affecting its marketability. A second appraisal may be obtained if necessary. The listing realtor can provide valuable input to the lender as to the condition of the property and the reasons why the property did not sell during the initial listing period. Offers to purchase. Lenders must negotiate offers to achieve the maximum sale price possible. If sold under conduct of sale, all offers must obtain court approval. In BC, if a property does not sell and there is a judgment to preserve, the insurer may purchase the property from the lender, which is referred to as the BC Special process. An offer to purchase is prepared by the insurer and forwarded to the lender's lawyer, who will seek court approval for the sale. There is no real estate commissions payable if the lender sells to the insurer. As a realtor, how do I go about getting listings from the insurer? The sale by the insurer of properties containing 1 to 6 units generally falls under marketing contracts, which are arranged through a competitive proposal call process. Proposal calls are advertised with the real estate board in the area where the properties are located, as the insurer wishes to engage a realtor familiar with the local market. The following are the two most common questions asked by realtors about insurer listings. Number 1, does an offer on an insurer listing have to go to court? The insurer is the actual registered owner of the property, so the listings never go to court. They are able to transfer title without court approval, just as an ordinary seller would. The court process is over by the time the property gets transferred to the insurer and they market their properties. The realtor should inform the buyer that their offer will not go to court, and response time to the offer will be much more immediate than that of a bank sale. Banks and lenders only have to go to court because they do not have the legal authority to sell the property, as they are not the registered owners. Number 2, how much was the mortgage amount owing on the insurer property, or the amount of the mortgage that was on the property when it was foreclosed? Insurer properties are owned clear title, and the amount of the previous mortgage has no bearing on what the insurer will find acceptable upon resale. They will sell their properties based on current market value or appraised value.